Hi, and welcome to the Market Alert for Wednesday, the 19th of February 2025. So, bullion and black gold bid, Bitcoin battered as bill curve kinks, and debt ceiling issues are starting to show up again in the T-bill curve as well. It's not looking good, is it? Risk on, cash out, gold, China, and DAX speculation surge. Speculative frenzy unfolding as cash disappears. So it's starting to, like I say, sound very end game type of thing here at the moment. US stocks eked out slight gains amid focus on Russia talks on Ukraine. And economic news today, it's 7 a.m. We've got the UK inflation forecast to actually rise by 0.3%, and FOMC meeting minutes later this evening, but no change to the rates during this one. Right, let's have a look at the markets for yesterday. Kick off with the Dow. And in the Dow yesterday, you can see the market playing catch up. You've got market was down, then it came back. You can see the volume as well compared to the half-day trading session on Monday. 30-minute chart in the morning, market held as Europe held with the DAX. And then once we had a retracement from this high down to here to 78.89, cash market opened and bang, down we came. But don't worry about that. Plunge protection team or some buybacks move the market back towards the high of Monday that was made, of course, during the President Day celebrations. And once again, the DAX continues to make all new highs, all-time highs, that is, 22,8844. Get ready for the 23,000, not that far away. We look at the 30-minute yesterday. We had a bit of a shakeout in the morning. Again, shakeout, get rid of some of the sales and then bring the market back. So not a problem. We can keep moving this up. We've got the UK CPI numbers that should support the market later because they'll be rigged. That's why they're known in the industry as the CPI numbers. And in the S&P, continuing to make new all-time highs as well. Probably just doing that now on the overnight, but yesterday putting in another one. Which you can see there. Let's just grab that number, and that was at 6138, and overnight we've got a tiny fraction of an increase. I think which one's which now? So that's that one. So yeah, 6138, and then overnight. So we're not quite there, are we? Let's just drag that out, and you can see there. No. So, but it's close to it. It'll soon whip through there and keep moving prices higher. There's the 30-minute. We had a sell-off in the cash market. Look at the volume there. As they came back to the market, we were oversold, and then bringing the market back up towards the high of Tuesday on the overnight market. So, FT100, quiet day yesterday, as you can see there. Not doing a lot. Overnight market sideways, waiting for the CPI numbers today. Very choppy yesterday for the FT100 there. And in the dollar, starting to tread water sideways at the moment, which you can see, but starting to move back up. That's going to impact on silver, not so much gold. So let's have a look at the metals. And in silver, being allowed to stay above the averages. Notice that now we've got a situation where all of the averages are in the right order, but you've got to get through that $34 per ounce level. Certainly, what's interesting to note is that February is not normally a delivery month for silver, yet there are 4,000 contracts that are still open for delivery in February. That's unusual. The delivery months in the futures markets for silver are March and July and September and December, but they trade every month, and February is not a delivery month, but this time it is. So are people and traders now, because gold's at nearly $3,000 an ounce, moving towards silver and taking delivery of it? Who knows? Or are they just hedging on the basis that we could see the same thing with silver being withdrawn from the LBMA just as much as gold? So I think there's a hedging situation going on there. Overnight though, given the chance, the market was dumped. Again, you can see that. So it was quiet, so let's do it. Market has been brought back, so a quick chance to make a few quid by dropping it 35 cents or more. And when you've got a few thousand contracts, that's a nice earner when it's nice and quiet. Yesterday the market traded sideways till 130, but then moved the market higher, which is unusual, I have to say. Meanwhile, the shiny metal of the yellow metal is still moving to the upside. As it can be seen there yesterday, we need to break this and head to $3,000 an ounce. Not far off there at all. And let's see if the CPI numbers help with this morning. And there you can see the same thing. Gold also hit overnight, but nothing like silver was, and continuing to move back. Needs to just take out yesterday's high in order to move higher. So in the gold silver ratio, starting to make an interesting picture here. We peaked there, and since then you can see that we've got lower highs as the market has consolidated and moved lower, and that's good. That's what we want. I'd like to see it down at 7-1 personally, but that's not going to happen quite yet. We've got a few more years, probably, never mind months, of this manipulation to continue before we actually get to that stage. But you never know. You never know what Trump's got up his sleeve at the moment. And let's have a look at yesterday's trades. And in the pre-market, in the grey area, the market just consolidating sideways. Had a bit of a move up there to the 200 MA, then went through it and then went to the high. So yesterday, given that it was nice and quiet in the morning, US back for the first day, and just look at that volume there that came in the pre-market again. The nonsense in the German DAX is just incredible at the moment, as it said in the headlines. There's absolutely no rhyme or reason for this market to be moving up as it's doing. Yesterday saw some profit taken at the open and then moving down a bit further to the DP. And you can see the green bars coming in there trying to buy back. And they managed to achieve that when they got down to the DP just below. You got one or two green bars there and stopping volumes. You can see the green there. Profit taking there and then bringing the market back. And then look what happens. Thank you very much. Get the selling out of the way, take the stops out of the way, and then bring the market back. In the afternoon, the DAX, again, because of that sell-off in the Dow, the DAX is quite strong. And you can see them there buying back in already, trying to hold the market. And then, of course, they managed to bring the market back, not following the Dow. Bit of selling coming in there, which you can see down here as well. And then prices trading sideways and trying to hold. We then get into a sideways move where, unfortunately, we see potential sell signal filled, buy signal filled, but then they bring the market back, just take out the stop there, and then they send the market moving to the upside, which is very frustrating, but that's the way it sometimes goes. So back up to the high there, and that's as much as I've captured there. So overnight, let's just have a quick look, see what's going on. The market's currently sideways. There's yesterday's high to be taken out at 22,884. Not a lot up to 23,000. The market's going to that target, whether it's today or by the end of the week. But 23,000 is so tantalizingly close. Why wouldn't you shoot for it? When we get to 23,000, it might be a different ball game altogether. As I said before, this week the market's put over 3,000 points since January. The market is just vertical, as you can see there, and it needs to have some sort of a pullback or correction to take some of the profits and froth out of this market. Okay, that's it for this one. Let's see what those CPI numbers are at 7 a.m. And with that, have a great day, and as ever, thanks for watching. See you in the next one.